I'm getting a lot of emails like, oh my gosh, when's the selling going to end? It's just every day, it's just this relentless selling pressure, media headlines, markets sell off again, relentless sell off, these type of things. We had the strongest 6-month rally in the index that we've seen since like 1990. It was a very relentless 6-month rally. So corrections are part of that. Yes, Virginia, drawdowns happen in bull markets. So this is just kind of what's happening in the markets right now. And this is why we talk about managing risk, taking profits. Markets are going up. It's like, Lance, markets are going up. Why are you saying take profits? This is why. Because you're going to get these corrections that occur. And just a few weeks ago, I said, when we get a correction in the markets, it's going to feel a lot worse than it actually is. This is a 3% drawdown, peak to trough. It's not been that big of a deal. But again, if you kind of listen to the media, it's like, oh my gosh, the world's coming to an end. And I'm getting lots of emails about portfolio positioning, these type of things. This is how markets work. Things occur in the markets. Markets start creating a narrative. And then when that narrative falls apart, everything kind of goes with it. And we've seen so many of these narratives over the last few years. Dollar debasement, interest rates are going to 6%. That hasn't happened. These are the things that kind of get based into the markets. So people start buying these assets. They buy gold, they buy Bitcoin, they buy stocks and all these type of things. And things occur in the markets. Just you have to be careful of these narratives that occur because they eventually fall apart. Here's what I'm talking about. So about 2 years ago, we were about 40,000. And at that point, this is when Michael Saylor starts coming out like, I'm buying Bitcoin, but do all this Bitcoin treasury thing. And the Fed is going to start cutting rates. And so we start kind of building in this premise of more rate cuts. And then we bring ETFs to the market. So now we provide institutional access to Bitcoin. And so we have this very large push that occurs in Bitcoin because of all this liquidity rush into this based on the narratives that effectively we're going to cut Fed policy. Fed policy is going to ease. We've got this dollar debasement issue going on, whatever it is, whatever your favorite narrative was, this is what caused that. What now has occurred is that we've seen this fairly sharp drawdown. Again, still within a bullish trend. Nothing terrible has gone wrong with this, but if you listen to the media, it's like, oh my gosh, why is this all going on? The reason I'm just using Bitcoin here is because there's a good narrative behind Bitcoin, but this is a very high proxy to the NASDAQ. So what you see going on the NASDAQ with AI stocks, etc., very highly correlated to Bitcoin. So these kind of run together in terms of liquidity. While we've had this very nice trending rise, so now we've had this reversal, we've had this break of support. So again, this bit of a correction right now is not really surprising. It's just part of the cycle. This is why it's important to pay attention to what's going on with markets. Be careful of these narratives because all narratives, 100% of them, always break. The narratives that are put out by the markets are never long lasting because the markets adapt to the narrative and then change.
Catch me daily on The Real Investment Show. The link is in the description.